What is going on, guys? We're back again with another video, and in today's video I will be going over 2 winning trades that I took live with my Discord utilizing my Forever model, and it will be on the S&P 500 and it will be on gold. So get your notepads out and get ready to continue studying the most simplistic way to view price delivery. Let's hop right into it. So I want to start off with the gold trade that I took. And I want you guys to pay very close attention to the start of the open on New York session at 8 a.m. And I want you to compare, like I usually do, compare both gold and silver on the right and see if you can notice any differences on this chart. If you had this mapped out properly, you would have seen that at the open at 8 o'clock and then moving into the 9 a.m. candle, we created SMT divergence at the previous hourly lows. But what did we do, actually? We had an hourly bearish fair value gap that we inversed on the candle from 7 a.m. So we came back into that candle, tagged it, then gold was the stronger pair, creating that higher low. Silver creates the lower low. So always I'm going to try and trade gold, but this was a better case scenario for us because we were able to trade the stronger asset compared to the weaker one, which was silver. So since we had that indication of the SMT at the lows on the hourly with gold, I wanted to then watch what was going on at the open of New York session and when this SMT divergence was created. So we were on the hourly chart for our narrative build and our bias. Now let's go to the 5-minute chart for an execution. On the open of New York AM session, 8 o'clock, we have short-term lows resting here on this push up higher after we inverse that hourly bearish fair value gap. Then price on the candle resting here does what? Runs a short-term low here and runs a short-term low here. So that created our SMT divergence between the 8 a.m. candle and the 9 a.m. candle's low. Therefore, I was just being patient, and you know what I'm doing next. I want to pay attention to the candle that ran liquidity and created our SMT divergence on the hourly with silver. This specific candle here. And also, what do you notice about this specific candle? We have a flat top high. So therefore, this is a labeled inefficiency. So regardless, if price wanted to come up and then just wick at it, but not close above it and then go lower, I would understand that. But I knew that price was going to draw back up to that 5-minute candle's opening price because that's an inefficiency. So I waited. All we need to do next is drop to the step 3 of the model and wait for price to close above the opening price of that specific down close candle. And we have it on this candle here, closing above the down close candle that ran the short-term low and created our hourly SMT divergence. So all I need to do next is this. Put our buy limit set at the opening price of the down close candle that ran the short-term low. My stop loss goes at the candle low that ran the short-term low, and I'm just targeting a 1 to 2 risk to reward. Here is my alert that I gave live while analyzing price to my Discord. Long gold at 2741.1, stop loss 2735.9, my take profit 2751.5. All labeled here, given live. No hindsight. This is all analysis based off of the confidence of my own personal Forever model. And you could see how clear and speedy the delivery is when I'm doing these executions because the narrative that I build and my foundation of my Forever model is so strong. And it's very specific and mechanical when it comes to price delivery in these markets. So simple, so effective. And I've been showing you guys this for months on end. And all you guys are seeing right now is the consistency of the model repeating and repeating and repeating, weeks, months, if not will be years on end, because this is how the market is booking price. Certain specifications, certain requirements need to happen in order for us to execute, and these were the requirements that were checked off, and we drove higher on gold. And here you go, on the left is my execution. We have the clear entry at the tag of the opening price there, and I'm taking partials on the way up to my take profit. Final TP, 1 to 2 risk to reward. So that is the gold trade. Very simple, simplistic. Now let's go on to the trade that I took on the S&P 500. I want you to do the same thing that we did before. We have the NASDAQ on the left. We have the S&P 500 on the right. Now, mark up any differences that you see on this specific chart, specifically in regards to SMT divergence between NQ and ES, before I show my annotations on the next slide. And if you got that marked up properly, we have a short-term low here that gets ran, and we have a short-term low here that gets ran. But S&P 500 makes the higher low here within this hourly bullish fair value gap. And the NASDAQ runs that specific short-term low here, indicating to us that we have strength on the S&P 500 and weakness on the NASDAQ. But also, look at this. We have no SMT at these correlated resting highs here. If you could see, this is just a failure swing. And all we're anticipating next is for price on these drops lower. This is just a run on liquidity for us to then engineer more stops to then move higher. And the reaction is confirmed and our reversal is confirmed from SMT. This is why this is so important when we're utilizing and looking for points in price to actually react and move to. So since we have a higher low on the S&P 500 and the lower low on the NASDAQ, we want to utilize and trade the stronger pair. So let's watch the 5-minute chart within this hourly bullish fair value gap and the run of that short-term low. So this is the chart on the 5 minutes for the S&P 500. And as you can see here, also this is supposed to say NQ, not ES. We're trading the S&P 500, not NASDAQ. Sorry about that typo. But we have a series of bar-coded tight candles in a range that we have one specific candle after 10 o'clock that comes down and clears this short-term low and all of this resting liquidity. So if that specific 5-minute candle creates the SMT divergence with the NASDAQ on the hourly chart, and it's just accumulation, potential manipulation, I'm looking for a distribution higher once this is created. So I am now on warning mode and ready to execute for my next steps in the Forever model. And you already know what we need to happen next. This candle closed above the down close candle that ran the short-term low and created our hourly SMT. That confirmed our change in save delivery and bullish order block that you could see here. Once we close above this down close candle that ran the short-term low and created our hourly SMT, we can then place our buy limits at the opening price of the down close candle, and our stop loss goes at the low that got ran, and we just target a 1 to 2 risk to reward. And just like that, the trade moves away from our POI that we utilize as an entry point. Notice the functionality behind the last trade and this trade here. Does that not look the same? The entry function, the narrative build, it all correlates. And this is where consistency is going to come in and confidence is going to be built within your execution. If you're consistently looking for the same sort of patterns over and over and over again, it's not going to matter when something happens and price moves outside of that pattern that you were trading before that gave you the win. You want to be looking for the same steps consistently over and over and over and over again. And you will not care about any move that happens if it goes without you, without certain things happening that you need in your checklist. And this is why I have been showing you the Forever model for months on end, weeks on end, and almost a year now. So specific, so technical in regards to execution that you will get so comfortable in this means of entry functions. And I want you guys to also know this, for the people that haven't participated, on Thursday, I will be announcing and doing a 7-day free trial to watch me trade live the Forever model, my analysis and my execution, see all of my trades and everything that I do each day in the market, Monday through Friday. I will drop a link to join that, to get on the wait list, in the description of this video. So make sure you click that and sign up for when it does open up on Thursday. But this approach to price delivery will be the only approach that I use and means of execution for the rest of my life, which is why I always highlight this, the Forever model, the only model I'll be trading for the rest of my life. But I hope this made sense. I hope this cleared up some confusion that you had in regards to my executions today. But just keep an eye out for all the trades that I'm taking. Journal them note everything that I'm doing, and just understand that every trade that I've taken before in the past will replicate to the trade that I take in the future, because I'm only looking for very specific signatures in price delivery, and they will always look the same and they will always replicate. But again, like always, thank you for watching. I hope you guys enjoyed, and I will catch you next week for the next upload.